Welcome back to Capital Markets Quickie. I'm your host, Endrit Sella. Let's dive into today's market recap. So yesterday was an interesting day for U.S. stocks. The Nasdaq Composite touched new intraday highs, while the Dow Jones Industrial Average dipped below the 40,000 level after closing above it for the first time on Friday. The Standard & Poor's 500 rose 0.3%, and the Dow fell 0.4% following its record close. The tech-heavy Nasdaq climbed about 0.6%, with Nvidia shares gaining ahead of the chipmaker's highly anticipated earnings later this week. Stocks have been gaining as investors grow more optimistic that the Federal Reserve will soon cut interest rates, despite some caution from policymakers. Even one of Wall Street's biggest bears has lifted his forecast for the Standard & Poor's 500 following record highs. The big question for investors now is whether that outlook is sustainable or if it's getting ahead of where the Fed is headed. A key test comes on Wednesday with the release of minutes from the Fed's May meeting, as reported by experts. On Monday, Fed Vice Chair Philip Jefferson and Fed Vice Chair of Supervision Michael Barr pointed to disappointing inflation in the first quarter as a reason for holding rates where they are, allowing more time for restrictive policy to work. The market is also bracing for heavily anticipated quarterly results from Nvidia on Wednesday. These earnings are eyed as a key catalyst for the rally in stocks. Expectations for the AI chipmaker's earnings and revenue are sky high, with growth of 400% and 240% respectively, and all eyes are on whether it can live up to the hype. At the same time, rallies in commodity markets are fueling fears of a knock-on rise in U.S. inflation. Copper prices on the LME topped $11,000 a ton for the first time, soaring to their highest ever level as a looming supply shortage draws in investors. Meanwhile, gold prices jumped to tap an intraday record at around $2,450 an ounce. That's all for today's Capital Markets Quickie. Stay tuned for more updates as we continue to navigate these exciting times in the financial markets. Have a great day and see you tomorrow.